Hi there, my name is Blaine Birch. I'm co-founder and CEO at Dryrun Cashflow Software. And I'm just going to walk you through a quick demo of Dryrun so you can get a bit of an understanding of what we do and how we can help you. So just to get started, I'll tell you a little bit about the problem we solve. So virtually everyone that comes to us at Dryrun is doing cash flow forecasting and management in spreadsheets. And oftentimes they're coming to us because there's a high level of volatility in their cash flow. So they tend to have AR and AP timing issues, big bills, big invoices, a lot of overdue invoices, and just understanding the timing and predicting when that money is going to come in is really, really critical for them. But some of the other groups that tend to come to us are ones that are multi-entity organizations that need to just see their cash flow individually in the different entities, but also overall as an organization. And some of those ones need to also report upstream to a board. So a couple of the things that we really pride ourselves on here at Dryrun is number one, the visualizations, just keeping them really clean, simple, high level for management teams. So it's easy to understand at a glance what's happening in your cash flow. But then the other side of it is to give financial professionals, the CFO, the finance team, control so that they can build whatever they really need to tell the story they need to tell, but in a way that's still standardized, straightforward, simple, and incredibly fast because we tap into your data and pull all of that in and do a little magic with it. Just to give you a bit of an overview of what you're looking at here, this would be a typical dry run forecast, and dry run is scenario based. And so right now you're looking at just a single scenario in dry run, a single location. And right now we're also in monthly view. So if I start to look at this scenario in a little bit more detail, you'll see that I can expand it. And in Dryrun, we separate your data into three sections by default. Cash in, which is basically where your open invoices, your AR goes, but also your past revenue account records so that we can use that as a little bit of insight. So you can do budget to actuals. And so we can use it to build a forecast forward. And cash out, which is generally your accounts payable, your big bills, the one-off payments that generally cause a bit of an issue in cash flow, and recurring, which is just the rinse and repeat, payroll, loan payments, things like that. And that helps just sort of separate those buckets out and give you a little bit more flexibility on how you're looking at your data. So you'll notice here as I've expanded this first scenario, you'll see all of your open invoices here. So a lot of our customers are dealing with a lower number of invoices, but large dollar figures. And when they're overdue and the timing of those payments are a really big issue for them. So we help them manage all of that. But if you have a much larger number of invoices and bills and you're maybe want to estimate more based on DSO or DPO, come and talk with us. We can do that too. Or even if you aren't worried about looking at your open invoices and bills and you want to do more of an indirect method of forecasting, definitely come and talk with us because we can handle that as well. But we commonly see this problem. And if you look at, you'll see all of our open invoices here. Anything that's overdue is in red and it'll tell you how many days overdue. And from a cash management perspective, it's really straightforward to have even multiple users into a forecast and to be able to manage this. So let's say, somebody has followed up, accounts receivable clerk on this invoice, and they know, hey, it's likely not getting paid till later in May. They simply change the date. We flag it in orange. Everybody's up to date. Now, also just go 1 month back here, and you'll see that all of the accounts in the past are in black. All of our forecast accounts are in blue. There's a lot of different ways to forecast in Dryrun. You can use one of our auto forecast methods, which this one I'm using right here is just mapping to last year to give me a really quick starting point of what's happening in the business. But you can also use an average of last year or base your forecast on a recent month, or you can start to build the forecast right into Dryrun. So let's say you're a project-based business and we've got a big project coming up. It's split into 5 phases. We're expecting to get paid over the next 12 months. You can put those predictions right into Dryrun and even look at the kind of budget actuals or forecast actuals later as well. A couple of the things that I like to show, weekly view is very popular in Dryrun so that you can see exactly when those invoices will land. We even have daily for, kind of companies in distress. And cash out, very similar. Here's our forecast. Here's the bills that we have. And then recurring tends to be just those regular repeating items. payroll, things like that. You can organize this in a number of different ways and simplify it and all of that as well if you'd like. So one of the things we really pride ourselves on at Dryrun is that you can model almost anything you want. So let's say we wanted to do a what if scenario in Dryrun. I can just duplicate this first scenario and start to build right on top of it. I can add some income right into Dryrun. I can do all the repeats, everything else. We've got a ton of control. Let's say we wanted to get a loan and we wanted to buy some materials. You can actually model this on the fly, even in a meeting. We can also flip to a net cash view and get a look at what's happening from a net cash perspective. We can also model in a number of different ways. I can click on an account in our auto forecast here. I can switch our auto forecast method, but I can also just change anything I want. So I can change this amount by percentage, by a number, change repeat, almost infinite number of things you can do to model out the forecast the way you want in Dryrun. You can flip on variance and you can start to look into the past. Finally, one of the things we're also very good at is multi-entity. So in this case, I've brought in data from 2 other locations. I'm working with 2 currencies here. I've got live currency conversion. And it's also really quick to build a consolidation. And so you can see here that now I've actually got 3 locations. I've got consolidation. I've even got a what if scenario. I can flip on and off my variance. I can look from a cash end view to a net cash view. And I can even get my data right out of Dryrun with our export, whether it's a graph, spreadsheet, whatever you need. If you have any questions or you want to come and talk with us and learn more, just visit us at dryrun.com. You can book your personalized demo and see if it's a good fit for you.